Okay, we're going to have a look at the 2004 higher level question, and in particular here we're looking at adjustment number 5, which is the large bank reconciliation adjustment. In this question, you have your trial balance. I've just put the trial balance here on the left-hand side, and on the right-hand side here I've just copied and pasted working 5, where it says the figure for the bank in the trial balance has been taken from the firm's bank account. That's this number here, 5,500, and it's a credit balance. However, it says the bank statement arrived at the end of 2003 showing a credit balance of 4,040. Now, a bank statement, that is from the bank's perspective, so that credit balance means that we actually have 4,040 in the bank account. That's a positive thing from our point of view because it's a negative thing from the bank's point of view. A comparison of the bank account and the bank statement has shown the following discrepancies. So we have a situation where our bank account shows an overdraft that we owe the bank 5,500, whereas the bank think that they owe us 4,040, that we have that much in the bank. The following discrepancies, 1, 2, 3, and 4, are found, and we're going to deal with them individually. The first 3 of these are things which we were unaware of in the adjusted bank account, things which we need to fix because they happened unbeknownst to us as a company. However, the fourth one is something that we were aware of, but the bank is not. So therefore, that one is going to be fixed down here where the bank statement occurs. So let's have a look at numbers 1, 2, and 3. First off, we need to do an adjusted bank account where we're going to type in an opening trial balance number of 5,500. That is the opening position. We think we have an overdraft of 5,500. However, we were unaware that investment income of 27 has been paid directly into the firm's bank account. That's a happy circumstance for us because that is money in, so we put investment income of 2,700 on the debit side. We were unaware that a check of 780 issued to a supplier has been entered in the books, cash book and ledger as 870. Now in accounting, a supplier is a creditor, somebody who we buy things from, and that check has been overestimated by 90 euro, or over-recorded by 90 euro, sorry. So therefore we have recorded out here 870 when it should have been 780. So therefore to rectify that we should put 90 euro back into the account, and that's a creditor error in there. 90 euro goes back in on the debit side because we have recorded too much leaving the account in that check. And then finally, a credit transfer of 750 has been paid directly to the firm's bank account. I'm not even going to read the rest of that working. I'm just going to say that that's going to be money in on the debit side, 750. And that is money again that we received unbeknownst to us, but now we're aware of it. The fourth one does not need to be adjusted in our bank account. We already were aware of that check. So therefore these 3, when we adjust them, we put 5,500 in the totals, take away the smaller side, we actually find that we have an overdraft of 1960. Now is that 1960 in keeping with what the bank say we should have? Well, not exactly, because the bank think that we have a positive balance of 4,040. But if we look at the fourth entry here, this is going to help us to establish that. Down here, I've put the fact that we have a bank statement with a positive 4,040, but there is a check for fees of 6,000 issued to a director has not yet been presented for payment. We have written a check, and therefore we've recorded it in our bank account because we were aware of this. We've given it to a director for 6,000. As of yet, that person has not gone to the bank to cash it in. It's sitting in his house. So therefore, the bank are unaware of this, but we know that if you were to take the bank's figure and take out that check of 6,000, actually we would have an overdraft here or a minus of 1960. When this 1960 here matches with this minus 1960 up here, or credit 1960, well then you know that the adjusted bank account work that you have done is correct. This piece of information down here is now unnecessary actually. It's just used as a check to make sure that your adjusted bank account is correct. In fact, I would encourage you to probably just do this piece, the check not yet presented. Just tap that into your calculator, and once you know that you're correct, then you can proceed with the rest of this working. Now what we need to do is we need to see what knock-on effects these three errors that we have now adjusted or corrected have. So the first one is about investment income, which we have received, and we were unaware of it. So if we look here and see that this is our investment income working. The full investment is 180,000 by 6% by 8 over 12, coming from over here, first to the fifth L3, 180,000. And that is an income, that's 7,200. Now, earlier in the question, we had patents where we had investment income incorporated into patents, 1,800. We need to take that out. And now we need to take out this other one, this 2,700 that we have received, if we want to isolate how much is the investment income due of 2,700. That is a current asset, the amount which is due. So we have an income of 7,200, of which we have received 1,800 here and 2,700 here in two different places, but we still are waiting on 2,700 of a current asset. That's the first repercussion of this work completed in the investment income due working. Now we have number 2, which is a creditor, and I think we have this here. Actually, if I do it this way, it might make more sense. So we have a creditor. So let's put in our trial balance number for creditors of 81,000 coming from the trial balance. And then we are just double entering this 90 euro from the debit side here to the credit side there. Actually, our creditors should be 81,090. Why do we owe more money than we thought? Because we have paid less money than we thought or recorded. We paid 90 euro less than recorded, so therefore we owe 90 euro more than recorded. It's a simple double entry to solve, to not have us thinking too much about that. You just bring it from the debit to the credit. And then finally, the blue one, the third entry, well, we'll just have a look at that here. It says a credit transfer of 750 has been paid directly from the firm's bank account on behalf of a debtor who has recently been declared bankrupt. This represents the first and final payment of 30 cents in the euro. So this chap owed us the full amount. He's only been able to pay us 30% or 30 cents in the euro, and that equates to 750. So therefore we need to take the full 100% out of debtors. If we transfer that up, 750 divided by 30 multiplied by 100, the full debtor was 2,500. That's a credit entry. You take that away from debtors because he's no longer a debtor. 750 of it he paid us, and that's fine. And 1750 he cannot pay us, and we put that on the debit side of bad debt, and that's an expense. So this 2,500 on the credit is matched by 2,500 on the debit between here and here. That brings our debtors number down to 71,400, and that's the number that we will use for our provision for bad debts calculation. So now we have an adjusted bank account with a new current liability figure of 1960. We know that's correct because we have confirmed it on our calculator. And then the three adjustments that we had to make because of things we were unaware of, we have adjusted them not only in the bank, but also in the other side of those transactions, in investment income, in creditors, and in debtors / bad debt down here. And that's that working completed.